The S&P 500 hit new all-time highs, but can it hold? Good evening, all of my fellow Riz Elite members and our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you haven't done so, make sure you get down there and you hit that like and subscribe button if you're watching this on YouTube. Make sure you click that bell icon right next to it to get notified every time we upload a new video here on the channel, because you're not going to want to miss a single one, because the market has been going nuts lately. It seems like we just can't be stopped. We're on a freight train, or are we? You know, we made a couple runs here to 4,900, and it seems like that's a little bit of a glass ceiling for the S&P 500 right now, despite some, decent earnings, though there were some surprises. And thankfully, I have the man himself here to talk about it tonight. Riz, how you doing?
Doing good, Chris. Yourself?
I am doing great. Glad you are back. It's a good time having you here. And yeah, the market just seems to be running into 4,900 and can't seem to bust through it. Now, do you think that we have enough momentum to keep going, or are we going to start stalling out here?
Well, in my view, we shouldn't be at this level. Again, I can't
Right.
force my will. Yeah, as you know, I can't force my will on the markets. No one can. But in my opinion, I don't think it's much of a justification to be at all-time highs. But I can see what's happening with the market. I can see what's happening in front of me, right? So if you want to rationalize what's happening, here's a few things for you to kind of chew on. One, we had solid GDP growth, right? I'm not going to get into the numbers of it specifically, but it was great. The fact that GDP continues to be strong, the U.S. economy continues to be strong. We've got potentially the market factoring in multiple rate cuts this year. I know we mentioned in Elite. I think even on Instagram, I posted, look, the market's kind of now factoring out the whole March rate cut, but we're going to find out this week. I believe there's a Fed meeting this week as well. From last week, I can also tell you that I know some of you may not care, but Canada held rates. So usually, if you've been watching the webinars, both Canada and the US in terms of a rate standpoint, we kind of work in lockstep. I'm not saying they're working together, but it just kind of works out that way. Obviously, being neighboring countries and all, right? But with that said, the market is looking at it in a very hyper optimistic way, in my opinion. In my purview, I think it's coming to a point where it's exhausting as to the level of I would say greed, if you want to call it greed or euphoria. That's really what this is. You can see with that beautiful trend line you drew in that teal color is continuing to be respected. I know last I was on, we're like, is it gonna, because we see that doji there, right? I think that was probably on there around that time.
Mhm.
Um, we were covering this, and we were like, okay, maybe it's gonna be a break to the downside, but it never did. It never did. 4,700 it's never dropped below 4,700 all year, and that's the kind of the lowest point that we've seen, and that's only about 200 points. Not only, but it's 200 points, and we never look back. And at this point, I'm like 4,900. Yeah, I think I didn't expect it to happen this year so fast. It was almost like, oh my God, are we going to hit all-time highs? And all of a sudden, not only did we hit the all-time highs of 4,800, we've crossed that now. We've left that behind by nearly 100 points. So the market, we can only kind of trade what's in front of us, what's happening. We can't force our will on it, so be very careful with that. But if I had my view, it's that it's overdone. A lot of stocks are way too frothy, way too overvalued. I am personally in cash, about continuing to be about 89, 90% of cash. And I will say that with the caveat is that I can be in cash and generate a return using different strategies, right? That I teach in the masterclass and that I give access to those in Elite, right? So when I say I'm cash 90%, it doesn't mean, oh, Riz, you're so screwed. You're cash. You're gonna miss out on all the moves. And I laugh because I'm like, last year I had a 70% rate of return, and I verified that with videos, not just screenshots, because we know how screenshots can be. So I verified that video, and yeah, it was an extraordinary year, and it's not like I was trading 50K or 100K, right? We're talking Seven figures. So for me, 70% rate of return while being predominantly cash last year kind of tells you what I'm saying, right? Now I know some smart ass are going to be like, Riz, well, imagine if you were way less in cash and you had more invested. I'm like, yeah, imagine I, fucking went all in on GameStop in 2021 as well, right?
Yep. We
Like
wouldn't be having this discussion
yeah,
right now.
exactly. And I'm like, I don't deal in the fortune telling business, right? As many people in this field do. So Chris knows all this too well, and I know you guys in Elite do as well. But you know, one last point about the SPX, we also know from a technical standpoint, once again, right back in that overbought territory with the RSI.
Yep.
And last but not least, I will say seasonality wise, for those that don't know what seasonality is, I'm not going to break it down for you. You can do your due diligence on that. But seasonality wise, we know that February, the last 2 weeks are bearish generally.
Good things to consider. And, one thing I thought that you really touched on that's important that, maybe a lot of new investors should be thinking about is, not forcing your will on the market. It's like, you can have a bearish stance and not be shorting everything. And, we would never recommend that, nor are we here to give financial advice either. But, it's important to always be flexible, be able to move with how the market moves and take positions that will make you profitable, and that's how you get to where you're going, which is of course financial freedom, which is the end goal, right? Let's continue on here and let's take a look at the breakdown for the S&P 500 and kind of get a look at what's going on. We'll take the 1 year look and then we'll zoom it in a bit closer to see what the S&P 500 has been doing this year, because I like starting off here to kind of see where we've been and where we're going. So obviously a big rollover here in tech over the last couple of days. There are a couple of earnings names that didn't do so hot that are bringing this one down. But we're seeing here as the market continues to rise up, we're seeing consumer discretionary, securities start to come down a bit and actually are now underperforming the S&P 500 over the past year. Now, of course, that is, the last trading year. We're starting to see financials perk up a little bit. Healthcare is kind of trading sideways, and honestly, most of the rest of them, except for energy here, which is starting to perk up as well. And we've got a pretty decent reason for that as well. So we'll take a look at that in a second. But let's pull it in with the year to date here. Now, I know there's not a lot of data here to look at, but I think this paints a pretty decent picture of what's going on. And that is tech and communication still propping up the market, essentially. Yes, we did have a little bit of a bad day here. If I'm not mistaken, it was Intel that kind of brought us down a little bit as far as tech is concerned. But, even though that happened, the market is still staying pretty strong at this point. We're seeing financials starting to curl back towards the upside, still underperforming the S&P 500, but above the zero line. Same can be said for healthcare, but energy is the real big winner here this week, and we'll talk about that in a minute. But yeah, Riz, do you have any thoughts on this breakdown that you'd like to share with us?
Nope. I would say keep in mind that as we head into a potential rate cutting environment, uh, we have to also know that certain sectors, certain industries obviously will benefit more than others. But one opportunity that I see from a sector standpoint could be energy, sorry, not energy, utilities and real estate. Now, the real estate sector, a lot of it has come back, obviously post-COVID lows and even 2022 lows. But there are some pockets of opportunities in the real estate sector, right? So whether it's REITs, industrial REITs, residential REITs, so on and so forth. There's a whole plethora of them. Now, when it comes to utilities, we saw a massive bloodbath in utilities last year, believe it or not, because we saw interest rates continue to go up. Now, there was a flight out of utilities, which are predominantly defensive stocks, slower moving stocks. They provide a little bit of a dividend yield. And there was a flight out of that. So money was leaving those utility stocks and going into, guess what? Treasuries, right? Bonds, because the interest rates were so high and so good. And it was pretty much as risk-free as it gets. So, right, why go through the volatility? Why go through holding different stocks and equities that have ups and downs? And they give you less return. So a lot of money went into treasuries in that, higher rate environment that we were and we still are in. But something to keep an eye for the remainder of the year to see if that kind of shift occurs as we see potential rate cuts start coming in.
Definitely some great advice there and some things to keep an eye on in the future. But let's touch on energy here because oil was in the doldrums, but we are starting to perk back up here, making a very nice curl off of the support area here, right around $70 per barrel, which we kind of played with a couple times, but we were never really able to make a solid bearish breach of. And it looks like it held, and we're starting to see oil prices creep back up a little bit. And it looks like we're trading right around $78 per barrel right now. So a very nice, bullish move on oil here over the last couple of days. Uh, Gold not really doing anything, mostly trading sideways here, right around the $2,024 per ounce area. But yeah, Riz, what is the reason for this uptick in oil when we've really just been, kind of stagnant and consolidating for the last couple of months?
Yeah, I think one caveat also, because we're doing this on Sunday and this is 8
Good
p.m.
point.
Eastern, you'll notice that the oil futures market is open. We opened up a little bit higher. I believe Jazz mentioned that we're up over $1 a barrel from Friday's close, and that's because of the situation with Iran. I updated in Elite. So that's an unfortunate situation. I believe some Americans lost their lives, I think, if I'm not mistaken, American servicemen and women, I think, Chris,
Yep.
if I'm
Yep.
not mistaken. So that's bad. That's horrible. So that's not good. That's not good at all. And then obviously, once the breaking news released and futures open, we see that uptick in oil. We know that geopolitical tension, wars, all these kinds of things are bullish for oil demand because it can cause potential supply instability. And really what we've seen off of that 70 area, that 70 support, as you can see, we've talked about it. I know, Chris, over the past few webinars that 70 area has been holding and it's looking pretty good to run up to 80, honestly, maybe even 85 at some point if we continue to see ongoing, continued geopolitical um, I would say excursions, let's so to speak. And I think in that sense it's not surprising, right? So the past week the market has been feeling a little bit more uh bullish on oil even before, today's news. And you can see that in the chart with a little bit of a ramp up.
Yep. Definitely starting to move. So keep an eye on that because there is definitely a lot of factors that go into the price of oil, not just, you know, oh, the strategic oil reserve is low or something like that. There's a lot of things that go into this that you got to keep an eye on if you're going to trade oil or any commodities for that matter, because it's not just technicals. It's never just technicals, but especially when it comes to commodities, you got to keep an eye on the overall big picture. Because there's a lot more to it. So let's take a look more at that big picture here and take a look at the bond yields and the strength of the US dollar. Now, we noticed this here recently where the 2 year and let me get my numbers straight here, the 2 year and the 30-year bond yields are really just kind of playing with each other and, kind of going up and down and, just kind of hanging out together here, right around this 4.35, 4.4 area percent yield on that, while the 10-year yields are really just kind of hanging out here down right about the 4.1% area. So really kind of a bit of, consolidation there in the 10 years, while the 2 and the 30 continue to be the top dogs. Now, when it comes to the dollar, we had a very nice bullish move, and we're really starting to consolidate here, holding right around this 103 area. So dollar looking very strong. And of course, Riz talked about increase in geopolitical strife, things going around the world. What happens when things like that happen? People run to the world reserve currency. And as it stands right now, that is the US dollar. So US dollar looking pretty good here, if you ask me, especially if more people start getting into it. But Riz, what can we take away from the bond yields? What's going on here?
Yeah, you'll notice that yield kind of picked up a little bit as into the end of last year, and then now kind of still trending up slightly, which is kind of shows you that the now what's happened is the market saying, okay, we might have this current, interest rate, benchmark rate staying a little bit for a little bit longer, right? So there was before last year, if I'm not mistaken, the market was factoring in probably like a 90% chance of a rate cut in March. Now that's dropped to about 45%. That's a big shift, right?
Oh yeah.
That's a big shift from like almost guaranteed to probably not going to happen. So, Chris and I have been on the ball on this where we've said
Yep.
many times we don't think March is going to be the case. Um, we've literally did like a good 20-minute video, a 30-minute video where we talked about my predictions, and that was from last year, or just maybe it was just 2, 3 weeks ago. I can't remember, losing track of time. But we said that, right? And then we
Yep.
stand by that. So we're not gonna take a victory lap, Chris, because we don't do that here. But I think you can go ahead and pat yourself on the shoulder for me, right? But with that said, I think bond yields can continue to stay here at these levels. I don't think we're gonna see what we saw in terms of September. Even March highs, if you can see in the 2 year, above 5. I think for those that wanted to get that locking in or getting in that Treasury bond yields, that rate 5% and up rate, I think that was your chance if you wanted to. That's not really my style, but for those that wanted to have that risk-free rate of return, absolutely, it was an opportunity to kind of take the risk off, and a lot of people did that. A lot of money moved out of equities and risk assets and went into safe havens like bonds, right? So let's see how it plays out. But we'll get a little bit more color this week on Wednesday from the Fed and Powell and on what they plan on doing. The current expectation is pretty much 100% given that they're going to hold. Last week, Canada held at 5% benchmark rate. So I see that the same probably going to be the case for the US. As for the dollar, you're right. It's definitely the world's reserve currency, will continue to be so. I would wager well into and past our lifetimes. I don't see that changing. These things don't happen overnight, contrary to what some fear monger on Instagram might be telling you. So, and I think that's a good thing. Obviously, long live the dollar. I know it's blasphemous nowadays, where a lot of even Americans are like down with the US dollar, which is
Ridiculous.
ridiculous. But I'm not gonna, anyways. Like, once I get into that, I'm not gonna be able to stop. So the point is, US dollar compared to other large currencies, country currency, is doing really well. And keep in mind that there is a positive correlation, meaning that US dollar is tied to, as Chris mentioned, if there's increase in geopolitical tensions, wars, goes up. Same thing with interest rates. So we saw the US dollar strengthen with a rise in interest rates, last year and the year before. But it also goes the other way. If we see some rate cuts, maybe after March, whatever the amount may be, we might see a little bit of a weakness in the US dollar. So something to consider.
Definitely something to keep an eye on. Now, let's go ahead and take a look at the key dates in the market this week, and then we'll look at the earnings calendar. Excuse me. But if you are here on our live webinar and you want to start posting your questions, feel free to do so. We've got one come in already. I know there are a couple more who are just waiting in the wings to post their questions. So go ahead and start doing that. But let's take a look here at the important dates in the market this week. And as Riz alluded to, Wednesday is definitely a big one with the Fed rate decision and then Powell chatting. So right now the consensus is they're going to hold. I have to, agree with Riz on this one. That would be my guess as well. But hey, we're not in the fortune telling business. They could surprise us, but I don't think there's going to be a surprise if you had to ask me to make a decision on that. So I'm with Riz on this. We do have job openings here on Tuesday. ISM manufacturing PMI, probably a nothing burger. But then we do have Friday, we've got the unemployment rate and payrolls coming out. So that could be interesting. And it looks like, there's definitely going to be a bit of a move here. Previous payrolls were pretty high. It looks like they're expecting a bit of a drop there. So that could be interesting. Looks like they're expecting unemployment to raise slightly, but not too much. But yeah, it looks like for the most part, on the bigger numbers, they're expecting a hold. And I suspect if that comes out, it won't affect the market too much. But what are your thoughts, Riz?
Yeah, I feel like you're on the money with the Fed rate decision stuff is going to be the key one on Wednesday,
Mhm.
and then Friday with the payrolls and unemployment numbers. You should, I feel like what they do here, and for those that are paying attention, is the unemployment numbers come in, payroll numbers come in, and then they can always get revised later
Oh yeah.
on. So they've been getting revised lower. Um, and it's not a oh my God, like, we're in a situation where it's like, okay, drop the lifeboats type of thing. It just gets revised a little bit after the fact, and that's always been the case. It's not just recently. They get revised. Now, it doesn't mean they get revised lower all the time, but yeah, lately they've been getting revised lower. So it's going to be interesting to see if that trend continues. And of course, like you said, Chris, where that consensus number is definitely lower than that 216K prior, right? So let's see how that plays out. And then unemployment going to 3.8, not too big a deal. What I can tell you from just like some anecdotal uh experience is that I can personally attest to the fact that there's quite a few people getting laid off, and that applies to the US and Canada as well. Obviously, it takes a bit of a surge for it to reflect in the data, but kind of like on the boots on the ground level, I can see, we've seen more layoffs. We've seen more layoffs continue into the year from last year, especially around tech. There's a lot of companies kind of letting people go, even like Microsoft recently letting go about 1,300 or something people in parts of different divisions, including their acquisition of Activision. So, a lot of different things going on in all kinds of companies, big and small. So, something to be aware of, and how this plays out into the broader, scope of things as we head into the remainder of 2024. Well, that's where the fun happens, right? So we'll see how it goes.
Yeah, definitely. More to come for sure. All right. Let's take a look here at the earnings calendar because we've got some freaking big names reporting this week, to say the least. Now, I'm going to go out on a limb here and say there's really not too much going on Monday for the most part. Looks like we got some banks. Phillips is not too bad, but there's really not any big names on here that I'm going like, oh, yeah, I'm excited for this one. But man, do we get some names on Tuesday before the open? We've got Pfizer, GM, UPS, and we've got Marathon reporting. Lots of big names there. And then after the close, it gets even better. Riz already alluded to Microsoft. Well, they're reporting after the close. Everybody's favorite AMD and Riz's favorite Google Alphabet. And if you love your coffee, even Starbucks is reporting Tuesday after the close. Then Wednesday, we just keep on rolling. The big name being Boeing here at the top of the list, but we've also got Philips, we've got MasterCard, definitely some big names there. Things cool off a little bit in the afternoon after the close. Qualcomm or QCOM, always something that we keep an eye on that we've traded before. But then Thursday, we've got more big names. Altria, previously Philip Morris, definitely somebody that's going to be going on there, if I'm not mistaken. Or no, Altria is different. I'm sorry. That's not Philip Morris. I
Yeah,
misspoke.
Altria
Completely different. Yeah, I was thinking of something different.
they're actually owned. Yeah, they're owned by Altria owns Philip Morris.
That's what I thought. Yeah. So my mistake on that. I misspoke. Blame me in the comments. Feel free. But then Apple, of course, after the close on Thursday, and Amazon and Facebook, aka Meta. And then, of course, the Widowmaker US Steel that I like to refer to it as. But that kind of cools things off. We've got some big names on Friday with ExxonMobil and Chevron. But after that, it definitely cools off a bit. But man, we've got some huge tech names coming in this week, and some other big names as well. Big in pharma, defense contractors. So there's a lot going on this week. Did I miss anything, Riz?
No, this is definitely the Super Bowl week of earnings season.
Yep.
Comes around every 3 months or so. So, you're pretty much on the money there with some of the big names that we're going to be watching. For me, I can tell you Microsoft, AMD, Alphabet slash Google, even Starbucks to an extent. It's going to be big. UPS for me as well. Boeing is going to be interesting after,
The
they
big
close one
issue
door.
with the
Yeah, Boeing closes
737.
one
Yep.
door. Yeah, they close one door and then another one opens or flies off if you want to.
That's
So
what they say, when God closes one door, he opens
yeah,
the flight hatch.
yeah,
So,
yeah, yeah. There's so many amazing memes with Boeing, but hey, that's the internet for you. Even
yep,
MasterCard will give us an idea. I believe Visa reported last week. I think they did decent,
believe
so
so.
expecting the same. Qualcomm, as you said, but the big one is Apple, right? Apple and Microsoft, the two juggernauts. Microsoft actually the largest company now in the S&P 500 and the largest market cap company, over 3 trillion, I believe now, which is crazy because I remember when Apple first was the first company to hit
Yeah.
a trillion market cap, and it was like a monumental achievement. And now we're at $3 trillion dollar companies, which is obviously Apple and Microsoft. It's still juggernauts. But Tuesday and Thursday, I think those are the days you want to make sure you're really paying attention and kind of keeping an eye on.
Definitely, definitely some huge names here. So keep an eye on that this week going in. All right, now we got some questions. I got a great one from Miguel, but I want to save that for the end because I think that's a great question to kind of close the webinar out. Let's talk about some specific tickers here. Nikhil wants to know about AMAT. We have traded this stock before. This is one that we have some history with. Applied Materials, obviously, they make they're a tooling company for semiconductors and things like that. Looks like they are selling off a bit here. Wondering if he should go in long on this one at these levels. Now, to me, that feels like a straight knife catch. Looking at this chart, that's what I'm seeing. Now, if you're into that sort of thing, you definitely could do it. Me personally, I wouldn't be jumping in on it right here. But Riz, what are your thoughts?
Yeah, I agree. I would not personally feel too confident running into this at this point, especially after big rejection of that 175, 178 area. And then we do know that technically, if you want to look at it, 165 can be a potential support, but not my style of entry in terms of a technical standpoint. AMAT is a great company from a fundamental standpoint, but remember, fundamentals can be great, but price and valuation does matter as well. And it's a decent company for sure. I just think from the technicals, not the most optimal entry right now. Before we get into the next one, I know Miguel had a question too about how would I
Yeah,
recommend to grow a $25,000 account.
let's do that one.
And
Let's do that one
although,
at the end. Let's do that
yes,
at
let's
the
do
end.
it at the end.
I think that's a
Absolutely.
great question to
Yeah.
close the webinar off because I think a lot of people are going to like that one. So let's jump to Jesse's question here about USO. Do we think this would be a good one to get into with all of the things going on in the Middle East? Now, I have been calling for oil to go higher than it has been for quite some time, and USO looks like it's starting to perk up here. Is this the time to jump in, Riz?
Yeah, I think if you are bullish on oil, you think, the conflicts in the Middle East and even after what occurred today can continue. I don't think it's a bad idea. If you think, oil can go to $80 a barrel, then I think, even after this little bit of a run up past the moving averages, I think it's not a bad idea. You can do it via a couple of ways. You can either buy the USO directly, the ETF as we're looking at, or if you want to have exposure to the actual oil companies, yeah, we do have some catalysts with, many of them releasing earnings like Exxon and whatnot. But you can consider that. Full disclosure, I do have a position in Exxon, as many of you in Elite already know. And, it's going to be interesting to see how that plays out. But yes, if you want direct exposure to oil ETF, oil movements via WTI crude, then this is the ETF for you. If you want to have exposure to oil prices and energy sector, and not directly, but as a proxy and do so via an oil company like Exxon, you could do Shell, you could do Chevron as well. So you do have a few choices there.
Sounds like a good plan. All right, Jeff has a couple of questions. First off, wants us to take a look at KBR. All right, KBR Incorporated. Thinking about taking a long position off the 5250 support area, which we definitely seem to be sitting on and holding over at the moment. Profit target looking around 56.58, depending on how it reacts to the 200 simple moving average. I mean, that's a pretty big move to 58. I think 56 is a little more reasonable, especially since we had this nice rejection here right at the beginning of the year. So, I mean, a bit of a recovery there would be would be definitely a good place to take some off if you want to go ahead and, lighten your position if you decide to take it. But Riz, do you feel like this is a good place to get in here?
Yeah, so if you can do me a favor and click the icon where that opens up that pane. Yep, perfect. So what is it? Technology company, KBR. I haven't actually traded this before. Uh, okay, all right. So a little bit of a yield there. All right. So we've already had earnings, and they've done one on earnings before. One's coming up in Mar February. Okay, services. Okay, all right. I got it. All right. So um, right now, from a technical standpoint, yeah, definitely, not bad, not bad of an entry. We do know that 50 is that kind of long-term support as well from the past as well. And I feel like, yeah, you could definitely consider scaling in. That 56 target is definitely way more viable and suitable than that 58 one, which I think is a bit, too
Eye in the
far.
sky.
Yeah, yeah, exactly, exactly. And I feel like, yeah, this is it. This is not a bad entry at this level. Again, keep in mind it's a financial services company from what I understand, so it's not it's not going to have big moves, or it shouldn't at least. And you can see that, right? In terms of kind of the candles and the price fluctuations, right? It doesn't move too big.
Yeah, definitely keep an eye on that one if you do decide to get in, and don't weigh down the boat too much would be my advice. All right. Also for trade management, he's holding Save. Let's take a look at Save, at aka Spirit Airlines, at a cost basis of $10 after taking delivery. With earnings coming up on Thursday morning, got pushed down Friday by some news. It's definitely a new catalyst-driven trade at this point, but I don't see any fundamental changes on it. I want to be sure I'm not missing something big on this one. So yeah, a bit of a black swan event here on this on Spirit Airlines. Holy cow, that's a dip. But we seem to be holding over that $4 area. We came down and hit it, and there was a lot of buying pressure there. Obviously, like you said, we did have a catalyst here going into the weekend, but there was definitely more buying going on, pushing this thing back up. So, what are your thoughts on this one?
Yeah, so as Jeff knows, and so do many of you, I'm sure that the merger deal with JetBlue didn't go through. It was blocked by the DOJ. Um, so that's why we saw this massive sell-off
Sell.
from about $16 to about $6, right? So that's the major thing there. In regards to uh missing out on something. I did look at some of the, very brief fundamental look on it. And, there was some talk that maybe there's some bankruptcy risks there, some, liquidity issues from a company standpoint. And yeah, there might be, but from what I see that, they should survive in terms of, being able to continue to operate. That merger was definitely going to be good for them, but obviously we can see once that got pulled off, the market reacted accordingly. It is in a downtrend, right? So keep that in mind. It has been in a downtrend, long-term downtrend. Um, and the fundamentals aren't the greatest. It is a smaller airline, keep in mind. So I would say keep a stop of about $5 mark. I don't think we should go much lower than that, but yeah, you're fine. I don't think you're missing out on anything. You took delivery by a short put, so you can continue to do covered calls on it, if possible.
Always an option to leverage those shares a little bit to make some extra cash. All right. Miguel is in the mood for a pumpkin spice latte and is wondering that should he maybe take a starter position after earnings? Now, we talked about this. Earnings are coming up on Tuesday after the close, it looks like. So definitely a potential there on that one. But yeah, I agree. Definitely waiting until after earnings. Taking it now is an absolute coin flip, and a good way to get yourself stuck in a position that you may not necessarily want to be on. But Riz, would you be thinking about maybe taking a starter position on this post earnings, or just kind of wait
Yeah,
and see and how it hashes out?
yeah, I've this has been on watch. I like kind of this setup because it's consolidating, holding above the 92 area, which
Mhm.
has acted as previous support as well. And like you said, earnings coming up, so I've kind of just waited, kind of stayed away from going long on this one due to the earnings, which is on Tuesday after close. And once that kind of comes in, I think they should do fine. We'll see how it reflects in the stock price though. And then from there on, I'll consider if we want to take a starter position or whatever position size we do. But yes, this is definitely shaping up to be a potential trade candidate.
Excellent. All right. John wants us to take a look at Tesla. Oh boy, let's talk about Tesla. Thoughts on this after the earnings drop? Well, this is a hype-driven stock, always has been, and I think if Elon tweets anymore, the SEC might come knocking on his door for stock manipulation. I jest, of course. But yeah, what are your thoughts here, Riz? Obviously, we're in a downtrend here after being in this really solid uptrend for a while on Tesla. We started just making lower highs here, on this move down, and that seems to be continued with some subpar earnings. Look like they missed a little bit on both revenue and EPS.
Yeah, yeah, their margins weren't good, guidance was subpar. Nonetheless, yeah, definitely one of the most oversold levels in Tesla since over a year. So the technical side of things is a bit of a knife catch. From a fundamental side of things, Tesla still is in many shapes and forms considered to be uh, I would say overvalued. I know some of the more diehard Tesla fans will be like, well, no, it's not just a car company, it's a tech company, it's an AI company, it's a robotics company, it's everything. So apart from that, I would wait and see if we can find a floor. It's definitely oversold. I think there is definitely potentially going to be an opportunity for long, but we don't want to simply just catch this falling knife. We know once this sells off, it sells off big, and we can see that right from 260 down to 180. It's down, and we saw that even last 2022, right? 2022, oof, like, just massive drop, right? And then they found a floor and started 2023 strong. Kind of the opposite here this time around, starting 2023 off, or 2024 off pretty weak. Um, but yeah, definitely a big mover. Keep an eye on this one. And it is oversold. Wait for it to find a floor.
All right, Ravi wants us to take a look at ALT. What are our thoughts on ALT? This one I am not too familiar with. Looks like some penny stock BS. I'm just going to throw it out there. Riz, what are your thoughts on this one?
Yeah, so it's what is it, like a tech health
Bio,
biotech company?
yeah.
Yeah, biotech, right? Yeah, I've heard of this. Definitely got beaten up and then it's had a massive run on some catalysts, I believe. I can't remember exactly what catalyst, but I remember seeing some of this stuff pop up last year. Right now it doesn't look too confidence inspiring. It's not really my style of trade. With going from about $3 or something to 9, and then I guess maybe it's fading now, post
Oh, yeah.
catalyst. So I would be cautious with any trade on these. Predominantly I stick with large caps, as you know.
Absolutely. Yeah, that's pretty solid advice. All right, Miguel wanted us to take a look at Lucid. All right, Lucid Groups, LCID.
Yep.
Garbage, don't trade it. That's my opinion. Riz?
Yeah, yeah. Another bloodbath in this one is we used to be a very hot stock back in 2021. And Lucid, these are all like moonshot type of companies, right? So yeah, they have a product, their cars are pretty good. But from a company standpoint, from a fundamental standpoint, horrible. They lose hundreds of thousands of dollars for every car they sell. Not sure I want to be in that rate just yet, right? So this is what I call a moonshot. It's like a massive, massive long-term turnaround play, which if it ever happens by some miracle, it does. If not, then you're stuck. You're just gonna hold the bag. So I feel like your money can be used more wisely, more strategically, instead of just bag holding something that is hemorrhaging a massive amount of cash.
Solid advice, and I will definitely mirror that one. I agree. All right, we'll take this last question, then we'll go back to Miguel's big question that I want to cover at the end. Thoughts on MS? Morgan Stanley, okay, bank. I've bought to hold, but noticed that it swings quite regularly, so I buy close to support and sell when it's closer to resistance. Well, I mean, that's always a good way to do it.
Yeah.
I mean, if we could time that perfectly every time, that is the key to success right there. You buy it when it's at the bottom and you sell it when it's at the top. But man, it's hard to time that sometimes.
Yeah.
So, all right. So Morgan Stanley here looks like we've already had earnings. Earnings were not too hot. Looks like they missed on EPS, but revenues were up, so that's good. A paltry 122 million up. Can't beat that. Not even a full percentage point. What can you say? But yeah, it looks like after some poor earnings, they've definitely rebounded a little bit, but really kind of holding in this 87 area, 87, 88. I mean, not super confidence inspiring, but I don't really care for trading financial stocks. That's just me personally. But Riz, what are your thoughts on Morgan Stanley?
Yeah, I don't trade them too often, as you know, but yeah, I think just taking a position at support is obviously a great strategy, and then trying to get out resistance. So in this case, I'm assuming you might have gotten in around 84, maybe you got in earlier. You say you've hold it for quite some time, but yeah, it might not be a bad idea to see if it can kind of get up to the 90 area, and then have that as your first profit target. And then if it breaks above, maybe 94 is that kind of second profit target area to get out at. I don't believe in kind of buying and holding on for kind of dear life type of thing, but that's me, especially not with financials, right? But yeah, I think if you can see it continue to move up, that's great. The dividends coming as well, so keep that in mind. And yeah, so far, overall, not a bad strategy. Just buy on support.
Great advice, and definitely keep an eye on this one. All right, let's tackle this big question that I wanted to hold till the end because I think this is really relevant to a lot of people. And Miguel wants, he said, how would you recommend to grow a $25,000 account? That's a great question because I think that's a situation that a lot of traders find themselves in, and they're like, okay, how am I going to take this, this chunk of cash and turn it into more cash? And I mean, that's the goal for all of us, right? So how would you do that with, a relatively smaller account, grow it from there?
Yeah, so 25K account, for most of you there in the US on a margin account, gets you out of that sort of trap of getting PDT rule or being limited with that sense. So when you have a 25K account in the US, or US based brokerages, you're clear. As long as that account value stays above 25K, on a margin account, you are not restricted with the pattern day trading rule. So that number one is good. Number two, what to do with it from there to grow it is one, you have to make sure you are utilizing proper risk management. You're trading the style and strategies that I trade and the style and strategies that I teach in the masterclass. I'm not saying it's the only way to trade, but that is one of the best, in my opinion. Obviously, it's worked for me, worked for countless others, and it continues to do so. Secondly, in the masterclass, when you have a 25K account with margin, the world opens up to you in terms of being able to use the different option strategies that I use and recommend. And so do many, many students and elite members, right? You're able to do a lot more, especially if you're at a brokerage like Interactive Brokers. Your money goes a lot further in terms of the styles of strategies that you can implement while having enough buying power and liquidity, right? So you can do the Raptor method, you can do the kind of the short puts and the covered calls, you can do all these kinds of trades, so long as you know how these trades work and kind of the risk reward and the pros and cons of each. And then you'd utilize these, and week after week, as you're able to do so with some consistency, you're able to compound, right? A lot of the growth that happens is by having consistent wins, and we have quite a few people in Elite that share their progress, and it's the consistent smaller wins that are not to be overlooked. They're not to be scoffed at, because if you keep getting those consistent wins, and you keep your losses to a minimal, you will have some losses. You keep the drawdowns to a minimal. You avoid the major pitfalls, like the major mistakes, like FOMO, chasing, trading on emotion, like making amateur risk management and position sizing mistakes. You avoid all these major pitfalls, and already, you have a positive, I would say, end result going for you. And then on top of that, you implement what we do in Elite, what we do, and what I share and teach in the masterclass. Well, you are set up for success, right? And it comes down to just execution, day after day, week after week, month after month. That's how wealth is built, and the same applies to your account, right? You're going to consistently uh, do well, and then you compound, right? If you keep removing the capital, if you need to, maybe sure, but if you leave that growth in. If you leave your profits in and you allow it to compound and grow, all of a sudden you're from 25K to 30K. That's a nice solid jump. And because you have 30K now, you now have the ability to have maybe more trades open, to take on a little bit more options trades, and the style that I talk about. You have more wiggle room. You can maybe take on a little bit more size, right? So that's how you want to approach it. Think of it like a ladder, one step at a time, right? And with your follow-up question, Miguel, pertaining to, percentage gain wise for position, there's no ideal thing. I don't like to box myself in with a specific percentage. It also varies based on the stock. It depends on the total market environment as well. It depends on how my risk appetite is. Could be very different to yours. So I don't have a hard percentage. I never do. But ideally, you want to have kind of a 1.52 risk reward ratio, right? So if you're wondering what that is, then the masterclass is, I would say, pretty much a given for you, or anyone that it's kind of on the fence and wants to take their trading to the next level. Because, and if you've taken it, for those of you that have taken the masterclass, not a bad idea to go through it. We're in the start of the year. A lot of people tell me they review the content. They don't have to go through the whole 26 hours, but they go through the key parts, the parts that maybe they need a refresher on. Things that talk about strategy and risk management. Those parts are all highlighted and easy to access, and they're segmented. So please go through those, right? Go through it. You have access to it. You will have lifetime access to it. So continue to refresh. And, as time goes by, I also continue to add and update the content there as well for free.
Great investment in yourself is your education. So definitely get down there in the description of this video. There's a link there for you to take you to the masterclass if that's something you want to invest in to take your trading to the next level for this new year, because man, it's going to be a wild year. I can feel it already, and I think everybody else can. So I want to thank everybody for coming out this week. Absolutely bombastic webinar. I mean, this was spectacular. Thank you everybody for coming, for all the amazing questions from our members here in Elite. It's great to see you all in the chat tonight. Riz, do you have any closing thoughts for us?
No, like you said, I echo your sentiment. Fantastic turnout, fantastic questions. I love it. Love the momentum, love the participation. Honestly, it means a lot to us. And of course, we love being there for our members. And of course, those of you watching the replay after the fact. But yeah, other than that, I think 4,900, we'll see if this holds. I feel like if it breaks above 4,900 SPX, we could see 5,000. I think 5,000 could be on the cards, especially dependent on what the Fed says. If the Fed takes a very dovish approach and all they talk about is potential rate cuts, then the market's going to be like, oh yeah, these guys are just waiting to cut, right? We're all good, to the moon. And obviously with the backdrop of the economy being strong still, yeah, I think we could maybe see 5,000. Does this mean I'm jumping into anything and everything? No, I like to have a margin of safety. I like to be more cautious. I like to take a measured approach, right? So I'm not one of those hype style traders just going in and out willy-nilly. So for me, yeah, definitely kind of taking things a little bit slow, gauging. And then if we do see that potential pullback, I'll reassess. But for now, 4,900 needs to hold and break above strongly, for 5,000 being a strong possibility in the cards.
There you have it. Thank you, everybody, for coming out. A special thanks to Riz for being here for this one. It's great having you on, as always. And we'll see you in the market on Monday.